our cryptocurrency segment is going to be about Bitcoin Cash. Now, with the Bitcoin Cash halving less than 2 days away, tough times seem to be in store for the Bitcoin Cash blockchain, as well as related Bitcoin.com staff. Now, if you guys don't know, Bitcoin.com is a Roger Ver operation. It is predominantly focused on the Bitcoin Cash fork of Bitcoin, and it does offer a news website, its own wallet, an exchange platform, as well as running their own mining pool. Now, in these troubled economic times, with crypto markets seeing a huge decline in March, Bitcoinist is reporting here that 50% of Bitcoin.com staff was laid off on Friday, just days ahead of Tuesday's halving event. Leading up to this event, speculation has been rampant. What will happen to Bitcoin mining if price doesn't perform a strong rally this year? Now, you may recall we've recently reported on how mining on the Bitcoin networks had a significant drop in difficulty and how this affects the miners, and in turn, how they affect the markets. Well, immediately following the difficulty adjustment, a number of miners on the BCH network began shifting their rigs to mine Bitcoin instead of Bitcoin Cash. Bitcoin's miner capitulation, which led to the large difficulty adjustment, which later results in attracting miners away from the BCH chain right in the middle of their volatile halving event. That puts BCH in a precarious situation, but its price right now is following the general crypto market recovery trend, sitting at $260 tonight. It has bounced from the $150 low, but despite its market performance, the BCH community's creators and advocates aren't sending overly bullish signals, in our opinion. The tech networking site Candor compiled a list of companies freezing the hiring or laying off of staff due to the pervasive virus, and it included Bitcoin.com among them. Now, Bitfury, the company behind ASIC miners, or one of the companies behind ASIC miners, was also on the list, and this notes that Ripple is in the middle of a hiring freeze as well. Now, drastic measures being taken, Bitcoin.com and the BCH chain winding down this much staff at once never looks very positive. While the BCH protocol may be bigger than just Bitcoin or Roger Ver, it is in for a challenging month ahead with the imminent halving and the uncertain market conditions. It's going to be interesting to see what Bitcoin Cash's price does post-halving, right? But more interesting than the halving is to watch the community and watch the mining pools. If price does not recover in a significant way, then mining is going to be relatively unprofitable for a majority of the people that are mining, assuming difficulty stays the same. And our next story is going to be about the Bitcoin halving capitulation. Mining death spirals don't happen in real life. As we just discussed, around the time of the halving, there is a lot of talk concerning these concepts, such as the difficulty of mining and, potential miner capitulation whenever price drops a whole lot, and how all of these issues can lead to so-called death spirals for blockchains, proof of work blockchains. This Bitcoin.com article, which points to the latest CoinShare study published by their head of research, Christopher Bendixson. And in it, he writes that Bitcoin mining death spirals do not actually happen in real life, and such speculations should be viewed as merely highly theoretical edge cases. So, as many of you may already know, the miners on the Bitcoin network get paid in Bitcoin whenever they mine a block. And every 210,000 blocks, or approximately every 4 years, the mining reward for finding that block is cut in half, is halved. And we call this event the halving. Now, with the daily new supply of Bitcoin cut in half, until the time of the next halving, when it will be cut in half again, around the time of these halving events, enthusiasts and the community at large pretty much get to buzzing about what it will do for the price of these assets, right? With the underlying idea that this will increase demand. Because scarcity is increasing, therefore this is a scarce asset, is deflationary, therefore demand should go up. Now, in combination with this year's economic meltdown and the looming risk, couldn't be any more dramatic. We could not have asked for a more fertile bed to spread the seeds of discontent with traditional banking system. All these factors combined, many crypto commenters and haters alike are forecasting doom for the industry if prices don't see a substantial rally from here. But as Christopher Bendixson goes on to argue in his report titled Why Bitcoin Miners Will Keep Mining, a true death spiral would be a highly improbable scenario. And he details how, with Bitcoin prices down more than 50% from their 2020 highs, miners have effectively lost half their income, and how a portion of the industry's miners are unprofitable and would be effectively forced to shut down. But in this doom-like scenario of miners exiting in droves, Bendixson acknowledges the drop in hash rate could be big enough to slow down block times enough to where the network comes to a near halt. Yes, a halting network would cause price to potentially crash, leading to more miners dropping out until no one is left mining and the price genuinely craters to zero. But, as the CoinShares report points out, this isn't entirely plausible because, for one thing, miners have a much longer term perspective than a short term speculator. Eventually, enough of a baseline dedicated community, including miners, always remains out of a longer term interest in a project. He also explained how it would also take other additional factors to bring pressure down on the network, including gaming the protocol's DAA or difficulty adjustment algorithm, as well as strategically dumping onto exchanges in volume and in a coordinated effort to bring price down and to bring this capitulation event about. But as the researchers claim, in real life, though, markets will not just be moved around like that. This would have to be a highly coordinated event, right? Now, there's other factors on an operational level that prevent shutdowns of especially large operations on rapid timelines, pointing out that powering down a several hundred megawatt mine is not as easy as flicking a switch. The local power grid itself would have to be taken into consideration when shutting down large operations in a moment's notice. And furthermore, many miners are said to have, offset agreements with their power sources, contractually mandating them to continue their draw for as long as they're able to pay their bills. And they're not going to go broke overnight. Now, the point being made in the report is that whether prices are dropping for Bitcoin, which they do all the time, or when the mining reward happens every 4 years, the operational realities are such that some players on the mining network feel a squeeze. Some are forced to go under and permanently close down shop. Others handle the period of drawdown and are driven by a longer time horizon where they hope to reap the rewards of the next market cycle, as they have done throughout previous history. Now, this report does conclude that the network was designed, and it is, the network is designed to handle these exact situations. And because of well thought out design choices in the Bitcoin protocol, the mining network has never been left in a position where it has failed to continue producing blocks. Mining difficulty has adjusted downwards on many occasions, sometimes even dramatically, as a result of crashing prices, which we see with the recent difficulty adjustment in a massive fear-inducing market crash that occurred back in March. And during that time, there was some sign of a few slow blocks around that time period, but the network was far from coming to a halt, even when price dropped almost 50%. And it's unlikely network participation would ever deteriorate to the degree of a genuine death spiral. So, in reality, not so easy to bring the system down. So, what do you guys think? What are you guys expecting out of Bitcoin Cash, out of the halving event? As I said, let me know. Let me know in the section down below, guys.